Thank you so much for joining me on the show today, Akpevwe. But let's look back at this week and look at how it has gone so far.
Okay, so at the fixed income market, we actually have seen a bearish sentiment in the market. We've seen a lot of sell down on the mid and the long tenured OMO maturities. I think it's a bit of the investors taking profits and also reclassifying their portfolio. Also, we would like to think that it's because of the CRR debits that happened last week, so there's been a bit of liquidity squeeze in the system. As such, we've seen banks sell down on their long tenured portfolio to be able to fund their obligations, their daily obligations. So, and at the FX market, we've seen a decline in activities on the I&E window. We've seen the CBN intervene, the major subscription or that comes from the CBN. About 55% of the flows we've seen in the I&E window are actually coming from the central bank. We've seen about the turnover at the market for the last week was about 2.1 billion for this week and 2.9 billion at the previous week, majorly from the central bank. And we also see rates at the I&E window go as high as 366.5 naira to the dollar this week, even though the CBN has been intervening on the in the markets, as they've also done the wholesale and the SMIS intervention on Monday. We saw 210 billion. They offered 100 billion on the wholesale, and the invisible and SME, they were able to do 110 billion on that. We've seen them sustain that over time. And we also expect the results of the last week's retail SMIs to be published today. We expect that they will intervene for like a total of 250 billion. They did about 210 the previous week. So we see them also doing that in the market.
All right, interesting wrap of the market this week. But let's get back to that OMO auction on Thursday. And I'm trying to understand why we didn't see sales in the other tenors.
Okay, because at the secondary market, you actually have these bills trading at higher interest rates than where you get it at the OMO auction. So you have bills, because like I said, the market was bearish, so you could have bought the 90 days and the 180 days before as high as 12.5, but we saw rates consistently coming out at 11.4, 11.65 levels. So it actually pays you to get those bills at the secondary market. However, on the long tenured bill, the 362-day bill is the first issuance of that bill in the market. And markets actually trading lower than where we saw the stop rate come out at 12.99. Even though 232 billion matured for the 5th of March, we saw them coming out rolling over 100 billion, and subscription was about 112. The sale was 110 billion. With the decline in the rate, we saw it drop from 13% to 12.99 level. That's because most of the bids that came into the auction came lower than 13 levels. So if they were comfortable taking the 100 billion they actually offered at 12.99, they just capped the stop rate at those levels. So.
All right, but then on the Tbills, you say you expect the bearish run to continue?
Yes, please. Because for next week, there's the maturities for the month of March is actually a decline from the previous months in February, where we had huge volumes, over 1 trillion maturing, 1.5 billion maturing. So for this next week, we're seeing about 54 billion maturing, just 54 billion maturing next week. So we think that there's still going to be this sell down in the market as market participants try to fund their obligations, and so you see rates going up at the secondary market. Even at this morning, we saw rates going as high as 12.9% levels, which have actually benchmarked what the CBN is doing on the long tenured OMO maturities. So.
What's your call for liquidity going into next week?
Okay, for now, we heard that the central bank actually did a refund on CRR to some banks. About 200 billion came into the system today, and I think market closed about 200 billion up, even though 232 billion was matured into the system. They only rolled over 110, so system was still up by 2. So at the close of business today, we should see about 400 billion. So if you have the wholesale on Monday for about 110 billion, we still expect system liquidity to be up by next week. Rates are going to trend a bit lower. We are 15% levels opening today. We see rates coming down to as low as 1 digit for next week, and until Friday, when there's going to be another auction or retail SMIs.
All right,
auction.
but then still looking at that FX space and still at the INE window, I'd like to get a sense from you, your level of foreign participation you would expect.
Okay, because of the coronavirus case that we've seen now and how it has impacted the economy globally, we've seen a bit of resistance from foreign investors in the window because, like I said, 55% of the activity that went on in the last 2 weeks were actually intervention from the central bank. So we don't see as much flows as we had seen in the month of February and all that. So I think investors are being cautious whether it's the right time to go into. I think they're trying to view to see how Nigeria is going to react to the one case or what we have right now. So I think
more or less like a wait and see approach to see how things are
yes,
going to play out.
I think so.
All right, then.
Yeah.
Thank you so much for your time on the show today. I've been speaking to Akpevwe Oputu. She's a fixed income dealer at Access Bank.